I'm Corbett Wall with DV Auction, here with the cattle market summary for the week ending January the 25th, where your fat cattle market continues to chase the elusive 125. We cannot establish a market at 125. We could touch on it, have a few deals the last couple of weeks in the northern plains on some really clean, high quality cattle that have reached 125, but we cannot get the bulk of the trade to be at 125. We were at 124 week before last, and then this past week just lost another dollar. Cattle carrying a lot of mud, and even though your packers are short bought and really need cattle and haven't secured a lot of cattle really for this year other than just their normal formula cattle, but we just cannot seem to get that done, and I think they missed an opportunity for the second week in a row to try to gain some ground on there. But we just continue to take one step forward and two steps back, and we took our second step back this past week, and something's going to have to happen here. We've got to gain some market position here. We've got just a little bit more time, and then there's going to be more pressure on the market. And we've got to, you've got to gain ground when you can, because you're going to lose it. You know, just if you're not paying attention all the time, you're going to lose it. Your cattle feeders just have no leverage in their trade at all. But let's look at the board for last week. February live cattle contracts. Monday was down, or Monday was closed on the board, which was nice, you know, kind of a decent week. The board was closed on Monday, and we didn't have a cattle on feed report on Friday, so there wasn't a whole lot to be scared of. But your board couldn't crash on a Monday on live cattle, but it did on Tuesday, down 140. Wednesday was up 42 cents, Thursday down 20, and Friday back up 70 cents, and that was the only contract month, February, that was higher on Friday. But February contracts ended the week at 126.05, so, and that was down 47 cents for the week, and your hedged feeders lost an extra $3 on their cattle, depending on wherever their closeout was at on their basis. So kind of tough week there. April contracts ended at 126.85, down 52 cents. January feeder cattle, Monday closed, Tuesday down 40. Wednesday, out of nowhere, we had a rally on your feeder cattle board and a rally in your cash sales. And it goes to show you a lot of guys wanting to buy feeder cattle, especially farmer feeders, but they're a little apprehensive because there's no support on the board. And but when we did see that come in Wednesday, and it spiked up higher, man, they turned their orders in and started buying cattle, and a lot of your sales were sharply higher on Wednesday. Thursday was up another 75 cents. Friday down 40 cents on some profit taking there, and January feeder cattle ended the week at 143.37, up $1.92 for the week. March was 143.62, up 80 cents for the week. That's your fat cattle trade, all about the mud. And a lot of people get dressing percentage kind of confusing because they want to call it yield, and yes, as we normally think about yield, dressing percentage is a yield. But when you have USDA yield grades, which are very important in themselves, it can kind of get a little bit confusing. But the mud hanging on those cattle's hides there does not add to their carcass. It takes away, and so whenever you pull that off and the mud stays with, and that's a lot of dead weight that somebody's had to pay for. So we lost $1 in your fat cattle trade at 123 on Friday afternoon. And but like I say, some of those cattle probably, if you figured in their poor dressing percentage, brought back more money this week than they did the market from a week before, because normally your good fat cattle address 63, maybe as high as 64%, and you hear some deals on some really clean, really fat cattle, because the fat does stay with them, the fill does not. But you hear cattle dressing better than that. But 63, 3.5 is pretty typical. There's a lot of these cattle that are carrying a lot of tag, not even making 60% dressing percentage. And that's tough. Your packers don't really want to give a live bid out. Well, they did give a live bid. It was a buck lower, but at 123, and a lot of guys took that, but I still think we've got probably a lighter volume than what is typical or what they really need to secure for the third week in a row, which is going to keep your Packers. We're going to find out on Monday how big the volume was, but Packers haven't really bought a whole lot of cattle all year so far. So just the formula cattle, but sometimes they just got to fill in around that. They usually have over 80% of their needs already filled, so we're just filling a small gap. But it's very important for them to keep that up if they want to keep these change speeds going as fast as they have. And they are continuing to do that because they are continuing to make money. But your dress price, $197, which was steady, and it makes it nice for your guys that are getting $197 there because they don't have to worry about what the dressing percentage is on those cattle. That's hot scale weights, and they held that market steady. But box beef cutout values gained a lot of ground, and this is kind of a time where normally we wouldn't start gaining ground yet, but your Packers are playing hardball on the other end too, selling to their customers with these meat products and box beef supplies there, and they are really making it tough on them and turning the price up on them. Choice cuts, your average trade for last week, $216.71. That was up $4.35. These Packers know how to make money, guys. Select cuts, $211.76 was the average trade for last week, up $4.69 compared to the average trade from the previous week. So kind of a small spread between choice and select there, just under $5, and a decent movement of 544 loads of cuts, grinds, and trimmings. Your slaughter, 610,000, not giant, but still 16,000 more than the same week a year ago because of a Monday holiday, which not everybody recognizes, but there was some interruption there. But that 610,000 this past week was 10,000 less than the previous week. But we had no cattle on feed report on Friday. Everybody just thought, oh, surely they'll put it out. There was nobody there to do it. A lot of guys were working and not getting paid like your market reporters that put out your mandatory price information and a lot of your sale barn information. But a lot of that's done by the states, and they were getting paid. But there was nobody in those offices and asked to do that work. There was no way they were going to get that stuff out. That information was based on January 1st. Well, they were off work before that and since, so no way they were going to do that. Your estimates from your analysts, the average of the analysts' guess, were released at inventories January 1st at 102.3, placements during December 102 even, and marketing's just under 100% at 99.9. So we feel like they probably will put out a cattle on feed report, but it'll be so after the fact. It's not going to make a big difference. It's not going to come out immediately. They've got a lot of other reports that were due before that they've got to get out first. So we're probably going to lose track of that, and it'll just be your really disciplined analysts that are going to keep track of that and put out that information, me not being one of those. But let's look at your feeder cattle market. For the week there, at the end of the week, real-time index on Cattle Market Central ended the week at 142.50 based on an 800-pound steer. That was down $2.12 from the end of the previous week. So, or actually it was higher, excuse me. Up $2.12, 142.50. We thought the previous week we were going to drop under 140 for your average on your index and get down into the 139s because all your cattle in the southern plains, your feeder cattle, were bringing in the 130s, but there was enough of those more premium type sales with farmer feeder demand in the northern plains that kept your index levels above 140, and then this week they were higher and 142.50, and like I misspoke, we were up $2.12 from the end of the previous week on lighter receipts, albeit. Cash feeders in your sale barns unevenly steady to $4 higher. We started out early in the week last week with your feeder weights, your bigger calves. Most all of them are calves, some short yearlings in there, but all your feeder weights were lower and your stocker weights were higher. So we should see some big gains on your feeder cattle weights early in the week here, like in Oklahoma City, Joplin, your big high volume sales on a Monday. But by Tuesday and Wednesday, it had already flip-flopped. So then we started seeing your feeder weights higher and your calves starting to tail off a little bit and just everybody dealing with the mud. And you know, it's not just your feedlots that are sloppy, it's your preconditioned yards that are sloppy. The wheat pastures are so boggy that you can't hardly turn wheat, or can't keep them out there. They just tromp all the wheat out. It's really been a battle here, and don't think it's not just wet in Oklahoma. You know, I was talking to a guy there over the weekend that was in southeastern Oklahoma, and he said you know, it's just been muddy there all winter long. Terrible. Get up into Kansas, a lot of those feedlots are saying it's the worst they've ever seen. And I know our receipts are lighter. We've cleaned up most all of your direct trade feeder cattle. Most all of your video cattle have all been picked up for the fall and early winter. Not that big of receipts in your sale barns, so some of your bull haulers, truck driver guys are getting to rest, and they're kind of just tailing off on their schedules a little bit. Not too hard to find trucks right now, but dead wagons, yes, hard to find a dead wagon. There's big time death loss in these feedlots, guys, and it hasn't been advertised very much, but I've talked to a lot of guys that are saying it's significantly higher. Maybe twice, you know, maybe an average size feedlot, you know, you're going to lose cattle. Maybe they'll have 20 or 30 deads on a typical day, just acidosis, one thing or another, new cattle, all of them put together. It might be twice that. Well, when you add up all those feedlots, it starts to get significant, and these dead wagons are having to make multiple trips to haul all these dead carcasses away, and everybody will tell you that. Been a lot of cattle die out there. They get bogged in that mud, then at night it freezes, they can't get around, they can't move, end up losing them. And, you know, talked to one outfit where they were just having to take the big payloaders and just get in there and scrape those pins and the deads right out with them. And that's kind of gruesome, but that's the way it is. But your cash feeders in your sale barns, unevenly steady to $4 higher. Like I said, it was on those weights, it was lower early, then higher late, and more higher than it was lower. Your calves, kind of steady to $3 higher. There's still a lot of demand for stockers. We've got a lot of people buying grass cattle for the early spring turnout, especially in the southeast. Good orders on lightweight calves in the southeast to be shipped in and start getting those cattle warmed up for an early spring turnout. And that's the best time of people that like to grow cattle is growing them on grass pastures in the summertime. That's the best. That's the easiest. You can ride around and sip a cold beer and check them, windshield them mostly. The weather's nice, and you don't have to wear your equipment out and yourself out bogging in the mud and trying to keep those cattle fed and watered in the cold and the misery. And spring is coming, guys. I know a lot of the guys in the Midwest, a lot of my friends up there, they're just getting depressed and they're just tired of fighting it. It's miserable every day. It is coming. It is going to be here. And then some of them are starting to get excited about spring turnout already and buying a lot of calves. But let's look at your sales. Late in the week, Burwell, Nebraska. It's a DV auction sale you can tune into when they have sales on Fridays. You can view and bid right there. Didn't have a sale the previous week, but compared to 2 weeks ago, Burwell, Nebraska had a calf special, and they were mostly $7 to $8 higher. Burwell is one of those sales, like Bassett, some of those sales there in Nebraska there that just get these outlandish prices, but it's because of quality. Got the best cattle in the world there. But light 5-weight calves there, steers, reached $2. They were in the upper 90s a lot, but one draft there did reach $2, so we're kind of getting back into that. All your light 7-weights, your 7-weight packages that averaged under $750 were over $150. That's a good market. Look at this individual quote on Cattle Market Central. 75 head of redneck steers weighed 600 pounds on the dime, bring $175. That's got to impress you. Let's go way out west to Shasta Livestock Auction Yard. There's enough people to handle that coming back from the big Red Bluff sale that they had on Thursday, and then Western Video helping us out with the broadcasting of the Red Bluff bull and horse sale there, big time. But had a big sale at Cottonwood there, and I like to call it Merle Haggard Commission Company there because right there at Shasta. But 53 head, Cottonwood, California, weighed 525 pounds and $180. And that's right on the West Coast, guys. And then a market that may not raise your eyebrow, but this is significant. A commodity market on Saturday, mind you. Fort Scott, Kansas, 64 head of 862-pound steers. Big load of big steers there, bring 145.85. Pretty good market. That's a look at your week's markets from Home DB Auction Office here in Canyon, Texas. We'll talk to you next week.